Today, we're digging into a story that, honestly, it goes way beyond the trading floor. We're talking about the crisis facing the 300-year-old London Stock Exchange. And you might be thinking, why does this matter to me? Well, because its health is a direct reflection of the UK economy's future. Okay, let's get into it.
To really get your head around the scale of the problem, you just need to know one number. Minus 40%. That's right. Since 2008, the UK market has lost 40% of its listed companies. I mean, this isn't just a small dip. This is a massive hollowing out of what was once the financial capital of the world.
And hey, don't just take my word for it. This quote really captures the mood inside the city itself. There's a genuine sense of alarm. So what on earth is actually going on?
First things first, let's look at the hard evidence. We're going to move past all the headlines and get to the facts and figures that are painting this pretty grim picture. And when you look at the data, it's pretty stark. Fundraising from new company listings, IPOs, is at its worst level in over 20 years. In the global rankings, London has just tumbled right out of the top 20. And the FTSE 100, which tracks the UK's biggest companies, its growth is just nowhere near what we've been seeing in the US.
So, okay, the numbers are bad, we get it. But why should this really matter to you? A shrinking stock exchange isn't just a problem for bankers in suits. Its effects ripple out across the entire country.
And just a real quick primer before we go on. An IPO, or initial public offering, that's simply when a private company decides to go public. It's a really vital way for them to raise huge amounts of money to fuel their growth.
And here is the crucial bit. A buzzing, healthy stock market isn't just about stocks and shares. It fuels company expansion, which creates jobs. It generates corporation tax, which pays for things like hospitals and schools. And, maybe most directly for a lot of us, it's where a huge chunk of our pension savings are supposed to be growing.
Now, check this out, because this is where the history gives us some real context. If we rewind back to the late 80s, you can see that UK pension funds had about 75% of their money invested right here in UK stocks. They were really betting on Britain.
And now, look at this. The shift is just dramatic. Today, that number has completely collapsed to less than 4%. UK pension funds, one of the biggest pools of money in the world, are just not investing in their own home market anymore. It's a massive vote of no confidence. Okay, so we've seen the symptoms. Now it's time for the diagnosis. What are the root causes that are driving companies and all that money away from London?
To really understand what's at play here, let's use a super simple analogy. I want you to imagine the entire stock exchange is just a big bathtub.
Okay, so the taps, that's the new companies listing through IPOs pouring water into the bath. And the drain, well, that's companies leaving, either because they get bought out or they decide to move their listing to another country, like the US. Right now, London's problem is simple. The drain is gushing while the taps have been turned down to a trickle. And here's a huge reason why that drain is so active. UK companies are just cheap. They trade at a massive discount, as much as 35% compared to their international rivals. This basically puts a permanent for sale sign on British business, making them bargain basement deals for foreign buyers. But it's not just the price. Oh no, it's really a perfect storm of factors. You've got political instability and Brexit, which have really damaged the UK's reputation for being a safe bet. There's a unique tax of 0.5% on every single share purchase, which is a direct penalty on investing. Add in some really complex regulations and the rise of private funding, and you can see why the water is draining away so fast. And all of this has led to this paradox, something people are calling the incubator economy. The UK is one of the best places in the world to start an innovative company. But it's terrible at scaling them up and keeping them here. Think of a company like DeepMind, a world leader in AI, born in London, but now it's owned by Google. The UK incubates the brilliant idea, but the long-term rewards end up flowing overseas. So that's the pretty gloomy diagnosis. But what's the cure? Well, there's a major fight back underway to try and reverse this whole decline and help London get its swagger back. Let's take a look at what that is. At the very heart of this fight is the CEO of the London Stock Exchange herself, Dame Julia Hoggett. And her big argument is that this whole narrative of decline, while it's powerful, is actually missing the bigger picture. She's basically arguing that everyone is looking at the wrong numbers. Focusing only on new companies listing, the IPOs, is misleading. If you look at the total amount of money being raised on the market, which includes money raised by companies that are already listed, well, London is still a European giant.
It raises 2.5 times more capital than its nearest rival.
A really key part of this fight back is innovation. So take this new system called PCs. The best way to think of it is as a stepping stone. It allows these promising private companies to raise money and trade some of their shares before they have to commit to a full-blown IPO. The whole goal is to bridge that gap between being private and public, and crucially, to keep those high-growth companies from leaving the UK. So, with all these reforms kicking off, where does this leave the future? I mean, are we actually seeing the start of a real recovery, or is this just a false dawn, a temporary lull in the storm?
You know, a huge part of this challenge goes deeper than just rules and regulations. It's about culture. UK investment culture is famously cautious. The goal is a solid return, sure, but above all, don't lose money. The US culture, on the other hand, is all about taking these huge risks on moonshot ideas, hoping to find the next Google or Apple. And that difference in mindset, it changes everything.
But, and this is a big but, we cannot forget the UK's incredible strengths. This is still the third largest tech ecosystem on the entire planet. It creates more unicorns, those billion-dollar startups, than France and Germany combined. The raw ingredients for success are absolutely 100% here. Which leads us to the ultimate question, doesn't it? The entire FTSE 100 is worth less than a single company like Apple. So, can the UK actually change its trajectory and its culture enough to not just start, but to grow and keep the next global tech giant on its own shores?
So can it be done? While all these reforms are a start, some people argue they're just green shoots. And to truly reverse decades of decline and answer that trillion-dollar question, the challenge is monumental. As one commentator put it so well, London needs more than just green shoots. It needs to grow massive trees again.